Hello, everyone. Thank you for joining me for part three. Welcome again. My name is Will. I'm a political economist, and I'm introducing velocity banking and using velocity banking for entertainment, educational, academic, and theoretical purposes. So, in looking at getting a possible HELOC for 106,000, just looking at it in general from a theory and maybe see what can happen, I'm proposing that I could have a income of $6,013.80, and that comes from business ventures and also my W-2 income. Now my expenses will be $2,873.20. On top of that, I would have debts of $2,907.69. So that'll give me a cash flow of $232.91. That's what's going on with me now in terms of the expenses and debts that I have going into velocity banking. I've had cash flow in general of maybe 1,300, but I've been bringing more debt into velocity banking based on a previous HELOC. So now my cash flow is about $232.91 a month. And that includes some of my expenses. I overpaid for some of the credit cards. So this is what I'm looking at from March. So March expenses or April expenses will probably be less because in some of my credit cards, I paid extra hundreds into. So now, so if I get the HELOC in general at 106, it will wipe out a tax liability of $3,744.86. In addition, it will wipe out an additional property at $25,678. Last year, I used the HELOC to wipe out one property. This year, if I get another one, in theory, then this 106 will wipe out a second HELOC. Now, what will remain would be the closing costs. So the closing cost for this particular HELOC would be 3.1% or $3,265.25. Now, because I'm an investor, I'm getting a HELOC, and the interest rate is the interest rate for this HELOC is 9.25. So I envy you. If you have a primary residence and you're able to get a HELOC, which may be in the 5 or the 6%, my HELOC is at 9.25%. I would love to have gotten a 6% or a 7% HELOC. So considering yourself very lucky if you're able to get a HELOC at a lower interest rate, because you could be killing the game in general. Man, again, I envy you if you can use your primary residence to get a HELOC at 6% or 7%. Oh man, that's incredible. So what will remain after the tax liability is taken care of from the 106, the property is paid off, the second one, closing costs at about $3,265. That's what I paid to close the loan at an interest rate of 9.25. That'll leave about 73,311.89 in general. Now I have one more mortgage that's at 75, and that'll be the third mortgage in general. So if I was able to get the HELOC, it would knock out this mortgage also. So then I'll be mortgage free. My SMART goal for 2025 was to knock out at least $70,000 and it reduced by one mortgage. On track, if I get this mortgage, to get that $25,000 mortgage taken care of. Now, currently, I'm having two mortgages. Mortgage two is at $790.34. Mortgage two is at $760.90. So between the two, I'm paying $1,551.24. If I get this $106,000 HELOC, and I just max it out, don't take any money from it, but just max it out, then the monthly HELOC first interest will be $817.00. Now, it should not go ever higher than that. So that should be the most I pay for interest over the 30 years of the HELOC in general. So the difference between the two mortgages that's remaining and also the HELOC interest would increase my cash flow by $734.16. Now I can do multiple things with that cash flow. I can pay the interest at 817 and continue to pay the 734 to pay down the interest, or for the first 3 years, I can pay down the interest and just kind of like let it drop, and then go to doing the principal. So that's where I'm at now. In April, again, my cash flow was about $232.91. Two mortgages that I still have on the credit report are these two mortgages costing about $1551.24 a month. If I do get a HELOC and pay for both mortgages, then they're convert to somewhat an all-in-one mortgage, because I'm no longer carrying a mortgage. They're all in a line of credit. By making this move, I'm saving I'm paying 817, and I'm increasing my cash flow by 734.16. So again, this has been part 3. Thank you very much. As a political economist, I'm watching the tariffs, I'm watching the economy, I'm watching changes in the economy. Credit card debt, they say, is rising. Foreclosures are on the rise. Many Americans are experiencing job losses. Some Americans are receiving notices of potential changes in employment. So thank you very much for stopping by, and this has been my journey, day 476. Started around this November of 2023, looking at a home equity line of credit and how it can help me. 2 years later, I paid off one mortgage, but it's under a line of credit, looking at possibly paying off 2 others and put them all under a line of credit, and then dumping my paycheck, dumping income in it, dumping rental income, and just see how it goes. All right, so please continue to follow. If you have any questions, you'd like to work with me and my team, number is in the description, and my email is in the description. Love to have you work with me. Bye-bye. Have a great day, everybody. Bye-bye.